See, if you enter here, you get stopped out. If you enter here, you smash take profit. So how do you avoid taking the losers and stick to taking winners? As always, we trade with the trend and we trade with breaks of structure. So here we are in an uptrend and we have a break of structure here, giving us a protected low here, meaning we have a zone from this high to this low. So technically, according to structure, right, we should expect a higher low, higher high. Let's wait for our liquidity too, so we can see price left the zone, it came back in, and then it pushed higher. So the first tap in an uptrend that always pushes back higher is your liquidity. If I enter underneath this liquidity sweep, stop loss below the zone and target higher highs, why do I end up just getting wrecked? The thing is, right, below your zone that we found, always look for the last break of structure before that. The last break of structure before that is when we had this high and we candle closed above it, giving us a zone from this high to this low. Now, can you see we have two zones directly stacked on top of each other? When you have two zones directly stacked on top of each other, never trust the first zone, always trade the second one. This first one is simply liquidity to come tap into here and then continue higher. Instead, if I use my old stop loss as liquidity, now I know there is an unmitigated zone below. Enter in this zone, stop loss below and target higher highs. You can see this ends up being a beautiful trade with a beautiful entry. And that is the difference between an A+ setup and a C setup. If you want my free setups rating, guys, you can tell all the differences between a good and bad setup. Just comment the word guide and I'll send it over to you.